Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Today again we'll take a look at the euro currency. Well, euro currency is a bit tricky situation. It's sophisticated right now because there are two major events that could significantly impact on the euro. And first one is the Italian referendum that you probably know about, and it could happen that everything that we will say right now will be in vain, because tomorrow morning or on Monday morning we will open the charts and take a look that euro currency is trading at absolutely different level. So mostly the public opinion tells that hardly will be the reforms that have been offered from the Mario Renzi, the Prime Minister of Italy, will be supported by the citizens. But this is the major opinion that right now stands in the mass media, and it's hardly we should pay attention to it. But guys, actually it could happen that's not quite so. The spread of the Italian bonds is widened significantly to the German bonds, and usually this happens before some significant events take place. That's why we do not exclude that it's really people could say yes, because right now you know that some anti-European Union sentiment is growing among the major members of the European Union, and so this is very popular recently. So that's why we think that the chances that in Italian referendums will be major voting on the yes to the program that was offered by the Mario Renzi, has not really small chances. That's the first issue driving factor that in general supportive to our view on the euro currency. Second driving factor is European Central Bank meeting on the 8th of December. We talk in details about it in our weekly research, so you could read more interesting detailed information on that subject. And currently, although many people talk about the ending of the quantitative easing program in March, and that is treated as a positive for the euro currency, so maybe the euro currency turns to the upward action, there are some important moments that suggest that European Central Bank will continue the quantitative easing program till for the another half of the year, mostly due to the low inflation in Europe. That's why it's not quite clear yet that indeed will be supportive to the euro. These moments mostly support our view on the euro currency, as we think that euro currency should continue downward action in the nearest future. First target, as you know, we have around 104. This is weekly ABCD target, but our long-term target stands around parity or even slightly lower. That levels that market really could reach within some months probably. But speaking on the short-term perspective, what we have, as you can see on the daily chart, picture hasn't changed really significantly. Even non-farm payrolls release wasn't able to push euro currency in one or other direction. As you can see, price mostly stands in the same range of our high wave pattern, and it couldn't change the direction. This, as you understand, is not really very good sign for the bulls. So because market still can't show any thrusting action, it can't show any significant action to the upside that day by day diminish the chance on the meaningful retracement. Theoretically, guys, we still could continue to monitor, continue to watch for a double ripple buy pattern here, but taking on the back such issues as this bearish grabber that is still valid, the lack and the absence of any support here, the market actually stands in the free space. This 1618 is just a minor target with A, B, C top pattern. It's 1618 target. No fib levels, no oversold, nothing. So lack of the support. And existence of untouched target at 104 makes really phantom chances on the real reversal or some meaningful significant retracement here. Especially do not forget on the two fundamental issues, the Italy referendum and the European Central Bank meeting next week. That also doesn't bring really confidence on a possible upward action. That's why, guys, theoretically, right, overall technical background exists that could lead to a pairing of the double ripple. But with having such background on the euro currency, we probably should not take any long position until we will not get the completed and confirmed double ripple pattern. And even when we will get it, so we should be extra careful to taking any long position here, because that fundamental and technical background is really strong and it's bearish. That's our view on the daily chart. On the intraday charts, guys, we also see some irrational behavior that is not quite supportive for the bullish perspective. First of all, take a look at the 4-hour time frame chart. This overall action looks very choppy. This is not definitely the reversal. This action hasn't any thrusting action. This is mostly reminds the very flat channel. Market looks heavy, and take a look at the second week in a row. It can't break through the minor 3.8 resistance. It's just minor level 108.80, and market tested once, first time, second, third, fourth time, and still can't pass through it. So you can see our election doesn't look like really reversal or something. It's very gradual and very choppy. There's a lot of pullbacks, overlapping candles. And so overall action, it's mostly reminds some pause in the downward drop. So it absolutely doesn't impressive, and it's very difficult to force yourself to take the position based on this action and to rely on this action. It means that whatever minor upward action will happen here, this is definitely just a retracement. Sooner or later, and probably sooner, market should continue to move down. So that is, guys, the shape of the retracement, not the upward reversal. But as you can see in the final part of this chart, we have minor bullish grabber that has been formed, and this grabber suggests that this top could be taken out. As a result, we could suggest, for example, on the hourly chart, this market could show still complete this A, B, C, top, D pattern that initially was the part of our head and shoulders, but right now, as you can see, this head and shoulders absolutely lost its shape. It just turns to some kind of just fluctuations channel rather than clear head and shoulders pattern. But still, this ABCD pattern could be confirmed, could be completed right around 107.30 area. This is, guys, by the way, favorite 50% resistance level of the euro currency. I do not have it on this chart, but you know that the euro currency likes the 50% levels. So, result of this grabber, guys, could be completion of this ABCD pattern, reaching of the weekly pivot resistance, and this could happen by this minor butterfly. So market could complete this butterfly, complete this ABCD pattern. That could become the final leg in upward retracement. Mostly due to the pattern that we have here. But I'm not sure that it will work. But still, as we still have it, we just assume that it will work, and market will show this minor upward action here. But guys, whatever will happen here, whether this pattern will work or it will fail, it really doesn't have any significant impact on the overall situation. If even it will work, that will not change anything here. Still, this will be just retracement action, and maybe particular after that completion market will turn down. That's been said, our conclusion here is the same. We confirm our bearish view on the euro currency in the medium-term perspective. We expect the further downward continuation here, and we treat this current action just as the short-term pause in a downward action, and it has really significant chances to finish due to the two major events on the coming week. First one is the Italy referendum tomorrow on Sunday, and second one is the European Central Bank meeting on the 8th of December.